market concentration has reached a new peak, with just 10 of the largest stocks in the S&P 500 accounting for nearly 40% of its total market capitalization. This is not a normal market. The three AI giants, Micron, Nvidia, and Alphabet, are not just leading the charge in their sectors, they're shaping the entire index. Evercore ISI reports that these three alone accounted for more than 40% of all positive adjustments to 2026 earnings estimates for the S&P 500. That's a staggering amount of influence for just three companies. The S&P 500 is no longer a broad representation of the stock market. Analysts at Evercore, led by Julian Emanuel, describe it as a market of stocks rather than a true stock market. What they mean is that a small group of megacap names is carrying the index forward while the rest of the companies lag behind. This concentration is unprecedented and raises questions about long-term sustainability and risk exposure. The AI sector is expanding rapidly. Technology, communication services, and consumer discretionary now make up around 60% of the index composition. This shift is not just about growth, it's about transformation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Industries that were once peripheral are now central to the index's performance. That's why investors are watching closely. Micron, for example, delivered a significant earnings beat in the latest quarter. Its performance is tied to the AI boom, as demand for memory and processing power surges. Similarly, Nvidia has become a dominant force in AI hardware, and Alphabet is leveraging AI across its cloud and advertising platforms. These companies are not just benefiting from trends, they're driving them. But with great influence comes great risk. The concentration of market gains in a handful of names means that a single downturn in one of these companies could ripple across the entire index. If one of these AI giants stumbles, the ripple effect could be felt far beyond their own stock price. That's why Evercore ISI is watching closely. The economic backdrop is also shifting. Core PCE inflation climbed to 3.3% on an annual basis, the steepest increase since 2023. This rise adds to the uncertainty around the broader economic outlook and could impact investor sentiment. If inflation continues to climb, it may pressure central banks to adjust monetary policy, which could, in turn, affect the performance of AI-driven stocks. Evercore ISI is projecting the S&P 500 to reach 7,750 by year-end, with an optimistic scenario targeting 9,000. But these projections rely heavily on continued AI sector growth and stable macroeconomic conditions. If either of those assumptions changes, the index's trajectory could shift dramatically. Investors should be aware that the current bull run is being driven by a very narrow segment of the market. While this has led to impressive gains, it also means that the broader market is underperforming. This is a double-edged sword. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. On one hand, it's a sign of strong innovation and growth in AI-driven industries. On the other hand, it leaves the market vulnerable to volatility if these companies face headwinds. The next signal to watch is whether the earnings projections for the AI giants remain on track. If Micron, Nvidia, or Alphabet show signs of slowing growth or face unexpected challenges, it could signal a broader shift in market sentiment. Investors should also monitor inflation trends and central bank policy decisions, as these could impact the broader economic environment and investor confidence in AI-driven stocks.